G'day and welcome to this week's property market update. So you've probably heard the news by now. The RBA met May and have increased the cash rate, taking it back to 4.35%, which is where it actually was November 2023. So we had a number of rate cuts since then, and now they've brought the cash rate back up to where it was. Obviously, inflation really the key concern here, and they're trying to do everything they can to control that, but it seems to be getting away with them, and that's really the options that they have, is to increase the rates. Now, a lot of people are asking me, is that causing a slowdown in the market? And all I can say is that right now we're still seeing strong demand, and definitely for properties that present well and are priced right with the right pricing strategy, you're seeing still great, strong results. Now, it will have an impact on buyer confidence, definitely in the lower category of properties on the Sunshine Coast. We will see dampening confidence there, I'm sure, but right now we haven't really felt the effects of that recent cash rate rise. Now, to put this in perspective, the average mortgage in Australia, I'm told, is around $700,000 today. So a cash rate rise of 25% points has probably increased your monthly mortgage repayments by about $120. And if you purchased, back when the rates were down at 3.6%, your mortgage repayments now are probably up by about $320 a month. Now, if you put that on top of the increased cost of living, petrol prices, etc., that's still a fair whack for the regular party who holds a mortgage. And certainly for people that are looking to, buy a property, I'd suggest speaking with a broker as soon as you can to really understand what that means for you, because it could impact your borrowing capacity, and you don't want to put yourself in a position where you experience some sort of mortgage stress. So look, right now on the Sunshine Coast, things that are working in our favour, a lot of growth, a lot of people still wanting to move here, beautiful location, so that demand is holding fairly firm. And certainly what I expect we will see is still a less amount of properties coming up for sale. A lot of people choosing to stay where they are, but there's still a number of buyers that are looking to downsize or upsize. So there'll still be those opportunities coming up too. And it'll be interesting when they bring out this new tax on investors, capital gains tax, and what they're talking about there, how that'll impact the market as well, because there's a lot of talk right now that, potentially a lot of investors might start bringing their properties to the market to sell up as well before that comes into effect. Now, if that happens, I would expect that a lot of those properties that do come up to the market, investor properties, they'll be snapped up by people looking for owner-occupier properties. They'll get purchased by those people, so the rental pool will decrease, and that'll push up prices there as well. And look, rental does have an effect on inflation as well. So bit of a tough situation right now in the economy, but the good news is that right now on the Sunshine Coast, we're still seeing strong demand, and I think we'll stay fairly steady for the next 6 months ahead at least as well. But look, we are seeing some markets like Sydney. I'm talking to a few agents down that way who are saying they have seen a dramatic shift in their market, and that might flow up here as well. But look, all good news. Number one, if you're thinking of selling, speak to an experienced agent in the area. If you're thinking of buying, make sure you speak with your broker and get an update from them as to your borrowing capacity and what's your options. Don't delay. I don't think there's any reason to delay. I think the market's still a good one, and you can still find good opportunities out there. But just do your homework, be a bit more diligent on it, and reach out to myself and the team here at MPG if there's anything we can help you with. Have a great day.